India's steel and mining industry is evolving faster than ever. But real progress happens when ideas, technology, and leadership come together. With 10+ years of experience, Metalogic has been connecting the steel ecosystem through impactful industry platforms across Pan-India. We bring together CXOs, plant heads, innovators, and decision-makers shaping the future of steel and mining. Focused events for the steel and mining sector. Tailored, customized events designed for your business goals. Research-driven forums delivering real industry insights. Powerful product and company launches that capture attention. Because we don't just host events, we create industry brands. From brainstorming sessions to live demonstrations, we create spaces where innovation comes alive, and exhibitions that showcase the technologies shaping tomorrow. Metalogic events, connecting ideas, industry, and innovation. Join us to shape the future of steel and mining. In an industry that builds nations, information is power, insight is strategy. The steel and mining industry drives the backbone of modern infrastructure. But in a rapidly changing market, every decision needs reliable intelligence. It began with a simple idea: a morning WhatsApp news update for the steel and mining industry. The updates quickly gained industry participation and credibility across the sector. This growing community led to the formation of Metalogic Research and Advisory. During the global disruption of COVID, we launched our digital intelligence platform, mymetalogic.com. A central hub delivering market intelligence, industry analysis, and strategic insights. From daily market movements to weekly strategic analysis, our reports keep the industry informed. Our consultancy services support businesses with market research, commodity pricing, and industry analysis. Through MyMetalogic memberships, industry professionals gain exclusive access to market intelligence and premium reports. My Metalogic, intelligence powering the future of the steel and mining industry. In an industry that builds nations, information is power. Insight is strategy. The steel and mining industry drives the backbone of modern infrastructure. But in a rapidly changing market, every decision needs reliable intelligence. It began with a simple idea: a morning WhatsApp news update for the steel and mining industry. The updates quickly gained industry participation and credibility across the sector. This growing community led to the formation of Metalogic Research and Advisory. During the global disruption of COVID, we launched our digital intelligence platform, mymetalogic.com. A central hub delivering market intelligence, industry analysis, and strategic insights. From daily market movements to weekly strategic analysis, our reports keep the industry informed. Our consultancy services support businesses with market research, commodity pricing, and industry analysis. Through MyMetalogic memberships, industry professionals gain exclusive access to market intelligence and premium reports. MyMetalogic, intelligence powering the future of the steel and mining industry. India's steel and mining industry is evolving faster than ever. But real progress happens when ideas, technology, and leadership come together. With 10+ years of experience, Metalogic has been connecting the steel ecosystem through impactful industry platforms across Pan-India. We bring together CXOs, plant heads, innovators, and decision-makers shaping the future of steel and mining. Focused events for the steel and mining sector. Tailored, customized events designed for your business goals. Research-driven forums delivering real industry insights. Powerful product and company launches that capture attention. Because we don't just host events, we create industry brands. From brainstorming sessions to live demonstrations, we create spaces where innovation comes alive, and exhibitions that showcase the technologies shaping tomorrow. Metalogic events, connecting ideas, industry, and innovation. Join us to shape the future of steel and mining. In an industry that builds nations, information is power. Insight is strategy. The steel and mining industry drives the backbone of modern infrastructure. But in a rapidly changing market, every decision needs reliable intelligence. It began with a simple idea: a morning WhatsApp news update for the steel and mining industry. The updates quickly gained industry participation and credibility across the sector. This growing community led to the formation of Metalogic Research and Advisory. During the global disruption of COVID, we launched our digital intelligence platform, mymetalogic.com. A central hub delivering market intelligence, industry analysis, and strategic insights. From daily market movements to weekly strategic analysis, our reports keep the industry informed. Our consultancy services support businesses with market research, commodity pricing, and industry analysis. Through MyMetalogic membership.
62 in our ongoing knowledge series, where we continue to bring together industry leaders, experts to decode the most critical developments shaping global commodities and trade. For those joining us for the first time, Metalogic is a research-driven platform focused on the steel and raw material ecosystem. Over the last decade, we have gone beyond traditional conferences to build a space for thought leadership, market intelligence, and meaningful industry dialogues. And today's discussion is exactly in that spirit. A quick housekeeping: this session is being streamed live on YouTube. So just in case if you're facing any problem, you can watch the program on our channel on youtube.com/Metalogic PMS. And to our viewers, this is also going live on LinkedIn on Metalogic Projects Management Services page. So to all our online viewers, welcome, and we look forward to your participation through comments and questions. So coming to today's discussion, we'll be discussing on steel raw material sourcing strategies for India, navigating risk, cost, and supply security. India's steel industry is entering a phase of rapid expansion, but this growth is increasingly being shaped by global uncertainties in raw material supply chains. The country continued to remain heavily dependent on imports for critical inputs such as coking coal, crude oil, battery material, and fertilizers, exposing the sector to price volatility, geopolitical risk, and supply disruptions. At the same time, global trade flows in key raw materials are undergoing significant shifts. Changes in sourcing patterns, energy markets, and emerging materials are redefining how industries approach procurement and long-term planning. For the steel sector, the reliance on imported coking coal remains a key structural challenge, directly impacting cost competitiveness and operational stability. This raises a critical question today: can India sustain its ambitious steel capacity expansion under the current risk environment? As India moves towards its vision to 2030 and 2047 goals, the need for resilient and forward-looking raw material sourcing strategies has become more important than ever. Companies are now re-evaluating traditional procurement models, focusing on diversification of sourcing geographies, balancing long-term contracts with spot market opportunities, and navigating the ongoing trade-off between cost efficiencies and supply security. This webinar will bring together industry leaders to discuss how sourcing strategies must evolve to address these challenges, ensuring sustainable growth for India's steel industry in an increasingly volatile global landscape. The discussion also comes at a very relevant time as Metalogic is preparing to host International Iron Ore Conference on 19th of May in Goa. And also we have a Steel Technology Festival Conference on 26th May in Delhi, which will bring together global and Indian leaders for the mining and steel industry to discuss production outlook, trade flows, logistics, and future of Indian markets. The next webinar we will be doing next week on myth of green steel. So, coming to this webinar, the questions what we are really asking today is, are we reacting to volatility or we structurally redesigning sourcing strategies? Today we have with us Amita Khurana, Group Chief Raw Material Procurement from Tata Steel, Mr. Puneet Jagataramka, Executive Vice President, Central Procurement, OPEX and Bulk Material, JSW Steel, Mr. Rohitswa Chakravarti, Head Central Coal Procurement, TS Global Procurement, PTE Limited, Mr. Sanjay Goyal, Executive Director Coal Import Group, Steel Authority of India Limited, Mr. Keyur Shah, Director MRAI and CEO of Mono Steel India Limited, and I'm your moderator. So, starting with Mr. Puneet Jagatramka, JSW has a significant mining footprint in India with around 14 iron ore mines, out of which 11 are operational across Karnataka, Odisha, and Goa. Yet, we still see import playing a role in sourcing mix. So, how do you look at this balance and what are the key gaps that imports are addressing despite having a strong domestic mining linkages? Puneet.
Hi, thank you. Thank you, Monica. So on the iron ore, I would say India is at the tipping point, and the growth of what we see in terms of auction blocks and operationalization of the same, as we have already done 11 out of 14, and the balance 3 also will be happening within a year. So all of them would be operational. So availability of iron ore in India is going to enhance at a rate, because today what we see over last 3 years, the iron ore production growth rate is lesser than the steel production growth rate. So that has been compensated primarily by the lesser export of iron ore and more getting consumed in the domestic. But whatever little import we have done, that has got nothing to do with what is happening in terms of overall in pan India basis. This is primarily got to do with the price, and because we are on the coastal side, so it works out better for us, and also the grade. In India also, we have seen the grade of Odisha has been slightly fallen, and in Karnataka also there has been a fall in the grade. So with the falling grade, sometime it makes sense to import the very high grade of iron ore, which we have been doing time to time. But as of today, we believe the India is at the growth trajectory even for iron ore production.
So, how are you currently balancing between domestic iron ore and imports, especially when the imported higher grade fine seems more economical for port-based operations? You mentioned that just now.
Yeah, port-based, and also in VIU, it makes sense compared to the lower grade of India.
So, in existing iron ore mines, what is the average grade available right now?
So in Odisha, if you see, it is about 60 is the grade in Odisha overall, 60, 62 is the average grade. Chhattisgarh has been doing well, but there also we have experienced the grade has fallen slightly, that is NMDC. And in Karnataka also we have experienced in fall of the grade. So the high grade import may continue, and as slowly India will pick up, then import also will slow down, but the high grade mine has to come up.
Mr. Puneet, you mentioned challenges with the grades. So, beneficiation can't be an option for Odisha.
So everybody is working on that. In fact, there has been a lot of persuasion in terms of incentivizing the beneficiation industry in India. We see lot many pellet plant also have been chasing for more pellet production in India, which has been a very big industry. Their capacity also has been not utilized, not even 60-70%. I think they are close to below 60 in terms of a utilization. So any policy on the beneficiation side will help. We have been doing beneficiation in Karnataka. In Odisha, we do not see much of a beneficiation, but we do expect there is a lot of scope in Odisha for the beneficiation. And with the support of the policies, it may start happening more.
Yeah, because in my previous webinar, we were discussing India is having a currently about 154 million tons of beneficiation capacity. However, we are only utilizing about 34, 35 million tons of beneficiation, which means there is a huge gap where people either they are not able to beneficiate or they are not beneficiating. I think that is one of the aspect where Indian companies have to really work on. So coming to you, Amita ji, uh, Tata Steel is in a significantly different position compared to many others, especially with strong captive iron ore linkages. But at the same time, there are some long-term structural questions emerging. For example, while iron ore availability is not a concern today for you due to captive mines, how are you preparing for 2030 phase when the lease will come to an auction? Do you see this as a potential risk for raw material security for Tata Steel?
Thanks, Monica. So I think this is a question which is getting asked to Tata Steel quite often, and as you rightly mentioned, large part of our iron ore mines will the auction, the leases will go for re-auction. Now, there are multiple initiatives that we've taken and things that we are working on. One is that, of course, we will be participating in these auctions, and depending on the economic, whether these auctions and the premiums will make economic sense, accordingly, we'll participate. Between now and then, there are some new mines which may come up for auction by the government, so we will continue to participate in that. We are looking actively at lining up our raw material sourcing from companies like OMC and MDC. We're also open to exploring sources from overseas. In any case, with our European operations, we do have connect with all the major iron ore suppliers around the world. So I think there are multiple things that are being worked at. The clarity will emerge once I think this auction process is complete, but there are multiple initiatives that have been taken are underplay, which will help us to get this security even after 2030.
So I believe now, since all the steel plants are increasing their production capacities, that will also open a window for Tata Steel to bid for more mines in the auction. As you approach that phase, what would be Tata Steel's strategy, and would you look to secure similar volumes through auction, or you're planning to diversify your sourcing mix beyond captive mining?
Yeah. So as I said that I think probably those days are gone where any steel company can be 100% the iron ore requirement or any raw material requirement can be met through the captive sources. As we are expanding production, there will be a need for blending in many sources to get the best value in use for our materials. So I think as in line with that, like if you look at coal, now, coal maybe 20%, 15 to 20% is our captive availability of coking coal, but 80% we are dependent on other countries from imports. So I think we will continue to look at this blend kind of a strategy, which means there are multiple sources. You will blend in low grade ore with high grade ores. You will beneficiate some. You will use different kind of materials to kind of get the chemistry that you want. But I don't think so. Anybody can be fully dependent on captive sources alone or imports alone. I think it's going to be a blend or a mix of multiple things. And depending on the way the global market will also evolve, because if you see today, China is the biggest consumer and importer of iron ore. Now, 5 years down the line, how their steel production is going to pan out might be different. Unlike coking coal, where there is more demand and less supply, iron ore dynamics are different. Iron ore, thankfully, has more supply than demand. So I think we see that there will be opportunities available even in the import markets, where today the kind of gaps that you see between domestic and import sources will probably get bridged. So we are open to addressing this situation, and as I said, it all depends on how the markets will behave, how our tie-ups within India will evolve, either through captive sources or through long-term contracts with the PSUs. So I think dependent on that, we will probably be evaluating various scenarios and accordingly taking a call.
So, coming to you, Keyur, you're representing MRAI and also your company Mono Steel. Keyur, since you are closely connected with the scrap ecosystem, how do you see this shift from imported scrap to domestic scrap and DRI impacting steel quality and cost structures going forward? Keyur.
So now, coming up with the imported scrap in bulk, that won't come up right now for India because Bangladesh, Turkey, they are paying very good prices. It's about $400 HMS. Turkey is paying 420 would be the price for shredded. Whereas India, the prices of domestic scrap is about, if you can say, it's around $380. So India would be only viable in containers. But now again, coming up with the containers are getting loaded from the load port, and again they are stuck up at the transshipment ports. Material availability is an issue in imports. Also, dollars is hurting us. So domestic scrap, there is actual huge shortage. So yesterday also, if you have seen the prices of the rebars and billets in basically in India, it has gone a price hike by about 1,500 to 2,000 rupees. There was a price hike. Each and every mills, they have done their sale close. And I suppose today also in Gujarat, most of the mills have not opened the prices, looking at the current demand scenario, because whatever the prices you open, you get bookings. And again, you have to face the issues for the scrap material. So for big companies, DRI again is a support for us. But there's also a restriction. You can use this much of DRI. You need to have liquid metal for your material. So that's a challenge.
So, when you touched upon this price hike in a single day, as in opening the market with 500 rupees higher and then closing the market by 1,200 rupees additional, which makes a hike of almost 1,700 rupees per ton of billet. As in, are the people able to absorb this cost pressure in the market? Why this price hike?
Actual, the demand is there in the market. Whether if you say about steel billets or it's rebars or it's DRI, there's a demand in market. Customers are able to digest the
You're,
prices,
you're,
which was
you're
not
saying
earlier.
there is a demand or there is a panic buying?
There is no panic buying in the market, actually.
Okay, so you're saying this is a structured price hike, I think in a
Yes.
single day, 1,200 rupees, 1,700 rupees.
Actually, steel mills were making a loss before. They were not able to get the prices of rebars. The actual prices, there was like market, you can say, squeeze in your profit.
Coming to you, Sanjay ji, you mentioned to me, when we were discussing about coking coal challenges with respect to the imports, you mentioned that the sourcing of coking coal due to the disruption in key regions like Australia and Mozambique, how are these weather-related uncertainties impacting your procurement strategy today, Sanjay ji?
So yeah, first of all, good afternoon, ma'am, and thanks for having me here. Yes, this year we did see an extended wet season in Australia, and we also saw some heavy rains lashing certain areas in Mozambique, from where we in sale procure material, right? But luckily for us, these disturbances, these weather-related disturbances, did not have any material effect on our overall operations in our various steel plants, right? So we have certain commercial strategies, and then there are some materials management related strategies, the latter being primarily focused on holding certain inventories at our plants in our ports. So from there, we keep feeding our blast furnaces continuously. And in addition to that, like I believe other major steel producers in the country also adhere by and large to this strategy. We have certain long-term agreements where we have a cushion of reaching out to players in other geographies, or maybe even in the geography which has been impacted. So maybe there is a player, there is a miner who can give us some additional material. So that type of a flexibility is strategically inbuilt into the long-term contracts which we enter into. So a combination of the two, managing our operations through the inventory which we consciously hold, as also reaching out to the miners which were not that much impacted by these disturbances, made sure that our operations were not adversely impacted, and they went on smooth. So, but yes, I mean, the wet season in Australia was slightly more than, I mean, it was stretched beyond what it normally lasts up to.
Australia and Mozambique, you mentioned both the...
Australia and Mozambique, when we talk about weather elements, we in SAIL faced issues from our miners in these two geographies, yes.
And the SAIL has now also started exploring Indonesia for hard coking coal. Do you see this as a long-term strategy shift? for sale, or more of a tactical diversification to manage current supply risk?
So I'll answer it in two parts. One is that SAIL has been procuring from Indonesia for many years now. We have a long-term agreement with one of the miner there with our primary requirement of coal. Yes, so that arrangement has been there. And secondly, the interest which we are getting from Indonesia and our interface with these new interests which have got generated from Indonesia, in my sense, has got very little to do with the current geopolitical disturbances. I think all steel players globally, they look towards diversifying their source base. So it's a strategic effort in that direction where we are looking at more people from Indonesia who are interested in supplying material to us. Yeah. So it's a strategic shift. It has got very little to do with the current volatility which we are witnessing.
Thank you, Sanjay sir. Coming to you, Rohit. Rohit, you are closely tackling global met coal markets, and I want to bring an interesting dimension here. For a company like Tata Steel, how do you ensure long-term security of physical met coal supply, given the fact that you are already growing, Tata Steel capacities are growing up, and especially in a market where that is increasingly volatile and globally competitive? Rohit.
Thanks, Monica. Thanks for that question. And just to have a context behind that question, so you have inbuilt the theory that securitization is important, but that comes from a premise that probably the demand is outweighing the supplies, right? So that is where you're coming from. But this question itself has to be looked from a different parlance, because if you look at steel industry globally, of course, there is this shift towards EAF in the Europe and all these zones. And Japan and China are obviously reducing their production of steel. As we see, the demand there is degrowing. So whether met coal is in a situation where we will struggle in terms of securitization, or whether it will be in excess, because China is also decreasing in terms of steel, and they have a large part of met coal which is domestically sourced, right? So that's an important question. But however, if we assume that demand is sort of outweighing the supply, so as to speak, then obviously, if you look at Indian steel plants, I think different strategies have been adopted by different players, including Tata Steel. So obviously, few of the things are like having offtake agreements. So you can probably go into a miner, you can have some sort of an equity kind of a holding, which a lot of Japanese steel mills used to have, and still have with a large part of Australian steel makers, or miners rather, coal miners. So that is one way of doing it. The other is, I think Sanjay ji touched upon the point of long-term agreement. So it's not necessary that you are having 1 year agreement, but you can go for multi-year contracts with some of the miners, where probably culturally and in terms of synergy between organizations, you see a strategic fit. So that can run into 3 years, 5 years, or something like that. The third part is, I mean, not being locked into one kind of sourcing strategy or one source, so as to speak. So in a basket, you can have multiple coals, right? So diversification becomes important from that point of view. So running in new coal trials, bringing in these new coals, having commercialization of these, and gradually entrenching them in the blend, so that if there is a disruption, like Sanjay ji mentioned that Mozambique or Australia had a disruption, probably bring in something from US or Canada to serve that purpose. So I think these are the three broad strategies which, as Tata Steel, we are looking at. And I think broadly, India is also looking at it that way, we would say.
Thank you, Rohit. Amita ji, coming back to you, since you have to leave also, so I'll, take up my questions with you on priority. So on one interesting aspect is the high dependence of imported flux for blast furnace operations, especially from the Gulf.
Yeah.
While diversification to China and Vietnam is happening, India also has limestone reserves. So what limits domestic sourcing is in this case? As in, how are you managing your flux now?
So Monica, I mean, we've been buying, let's say, significant amount of fluxes or our requirement from Middle East for a number of years. It offers value for our money. I mean, you get good material, the voyage time is shorter. So obviously, there's been a dependence, and which has got severely impacted now with the onset of this escalation. Now, the second part of the question, that India also has reserves, then, how are we managing? So India does have reserves. We have reserves in Rajasthan. We have some in Katni region, etc. But, it's cheaper to get material from Middle East in a vessel than get it by rake from one of our own states to our plants.
So you're saying
Your
logistically, you're
so
finding it more
logistics,
viable.
so there are two, three things. So one is that over a period of time, the logistic cost has gone up, enough rakes are not available. So the sources itself haven't really got developed that much. And of course, they've been costly. And since there have been ample supply of fluxes from Middle East and a couple of other countries, I think the supply chains also got developed in the same way. Now, one of the challenges that we are facing, even if people are ready to, let's say, pay more, incur this additional logistic cost, but have inventory build up because of the disturbances which have happened in the Middle East, is that some of these mines are not of a large scale. They are relatively smaller scale mines. They don't have enough, let's say, environmental clearances to operate beyond a certain level. So even if, let's say, you are keen to buy more, you're able to pay more, or you're able to incur the logistic cost which is there, even then maybe the domestic sources can, most possibly, they can augment your existing supply. They cannot replace the supply from Middle East. So I think we continue to rely on the Middle Eastern ports. Some are closed, some are working. There is queue which is increasing of vessels. We are looking at alternate geographies, getting some material from, let's say, China, Vietnam, etc. These options are there, but I think it's going to take really some time for anybody to develop alternate geographies on a sustainable basis, on a regular basis. And if, let's say, this war, and I hope that it ends soon, I think Middle East will continue to be a source of supply for still a significant tonnages.
We also hope that this war ends soon and everything comes back to normal.
Yeah.
And if you look at the moment, as in the next 10 to 15 years, what will be the biggest challenge for raw material sourcing for Tata Steel when we talk about the resource access or cost volatility or regulatory uncertainties? What could be the biggest challenge for you?
Yeah. So I think the challenge which is unique to Tata Steel as compared to our peers in next 5 to 10 years is that we may not have the captive iron ore supply, because depending on the outcome of the auctions, which will happen in 2030, we may not retain these mines. And if it doesn't make sense, we shouldn't ideally, but depends on how the auctions will really go. But the larger, I'll say, the challenge that we or anybody in our position are facing is that we continue to be dependent on imports of coking coal. While of course Coal India have taken a lot of measures, they have eased out many things. They are bringing auctions on a very regular basis. But I think due to the inherent quality, coking coal from India will not be able to replace in a large way the imports that we are doing. So that's one. So I think for me, the challenge is that some of these resources, whether it is in India, let's say by OMC, NMDC, other mines, or overseas, the coking coal sources, the capacities are not growing really, right? So everybody will be chasing same share of pie in some sense. So I think it will have implications on the cost. There's not enough investment in the mines and the port infrastructure, etc., which is happening, especially on the coking coal side. So I think, and the other challenge that all of us will face is that whether it is coal or iron ore, the quality of these materials is going down. The quality reserves are depleting. New quality, good quality mines are not probably coming up, or they're not enough reserves.
Which
So I think
Puneji also highlighted
will
that
have
the
struggle.
quality and grades are going down now.
Absolutely. So I think quality, cost, availability, all of this continues to be a challenge, with the only upside to this whole thing being Europe going for transition to alternate technologies, hence not needing coking coal, and iron ore supplies growing at a reasonable rate, which means the domestic and the import, the parity will in some sense come, the gap will narrow down over a period of time.
So does that mean even large integrated players cannot fully insulate themselves from raw material risk going forward?
I think till such time as your supply chains are going beyond your borders, I think you're always exposed to risk, right? You're exposed to all kind of risk. We today discussed about weather risk. But there are other risks related to the government policies. Like Vietnam, at some point in time, as a source, was developed for limestone supply, but the government put 30% export duty, and just the entire source, in some sense, disappeared for the export markets. So we see that increased government interventions, all these geopolitical issues, weather issues, supply chain issues will continue to rattle you. And I think the only strategy one can adopt is not to have all eggs in one basket. Have enough diversification of sources so that if one fails, you're able to activate something else. Have enough relationship goings with the with your supplier community, so that they know you, you know them, and you're able to activate again anything, anytime if there is a risk pans out, you're able to activate other sources. But I don't think so that anybody can really mitigate the risk. We can only manage the risk. But assuming that we can completely avoid the risk I don't think so. Then, we are probably looking at it in a very realistic fashion. All these challenges will continue to be there. It's basically essentially our responsiveness to these risks. How quickly we are able to manage the situation is what will probably make a difference. But no, I don't agree that we can fully securitize and have no risk in our supply chain.
That's anyways, I will take up with Puneet ji, Keyur, and other people. And thank you so much, Amita ji, for
Thank you
being
so much,
available.
Monica.
And I have managed to make you free by 3:30 as promised.
Thank you so much. Thanks. Thanks.
So,
Bye. Bye.
thank you so much, Amita ji. So coming to
Thank you,
you,
Amita
Puneet
ji.
ji, on coking coal, JSW has been sourcing from multiple geographies like US, Russia, Australia. How has your sourcing mix evolved post 2022? And are you actively diversifying further to manage geopolitical risk? By 22, I mean to say the war between Russia and Ukraine.
हम्म नहीं तो इसमें मोनिका जी हमने क्या देखा सिंस कोविड टाइम इवन इफ आई गो लिटिल बिहाइंड ऑन दैट सिंस 2020 every year has been a new year in terms of a geopolitical development whatever has been happening. And as advised by Mr. Sanjay ji also, हालांकि उनके सेल के पास तो डोमेस्टिक कोल भी है कुकिंग कोल इवन टाटा ऑल्सो हैज so diversification became the necessity and very important element for all the steel mill on the cooking coal side, because every forum you go you keep hear about bad weather or cyclonic conditions in Australia has been increasingly bothering and disturbing the supply chain on the cooking coal. तो इंडिया एक जमाने में 21-22 में वी हैव सीन दैट इंडिया वाज इंपोर्टिंग अबाउट क्लोज टू 75% ऑफ द रिक्वायरमेंट फ्रॉम ऑस्ट्रेलिया, which has come down to now 50% the total buying. So that means India, with the increase in the requirement, also has diversified 25% other than Australia, which was the share of Australia earlier. So India has gone ahead with US, Canada, Mozambique, Indonesia, all these places. And the share of all other suppliers have been growing. Even Mozambique has been growing, US has been growing, Canadian has been growing, Indonesians have been growing. बीच में लोगों ने तो मंगोलिया भी ट्राई किया था, इवन दो इट डिड नॉट वर्क आउट लॉजिस्टिकली, इट वाज नॉट सो इकोनॉमिकल. But diversification has been a day-to-day life on the cooking coal. People are also trying to enhance the production in domestic coal. Government has been very supportive to declare it as a critical mineral, the cooking coal. And we have been also, we have picked up few mines in India. And we are also setting up the refined washery and also going to start the domestic cooking coal supply. So diversification is a necessity.
Puneet ji, during the Russia-Ukraine phase, we saw extreme raw material price spikes, which the market eventually absorbed compared to that period. How do you assess the current risk environment right now? And are we prepared today?
तो इसमें जो एक आप जो सिक्योरिटी और प्राइस रिस्क बता रहे थे, तो रोहित ने भी आपको बोला था, इट इज नॉट एनी मोर रिस्क ऑफ सिक्योरिटी इन टर्म्स ऑफ अ कुकिंग कोल. So similarly, at the same time, because along with the security, price risk also has been on the yardstick, it is lower now. So I would say with respect to cooking coal, lowering demand in Europe, Japan, Korea, and China has reduced the element of security and price risk on cooking coal.
So, Rohit, coming to you, given that different coals have different properties, how do you manage blending strategies while sourcing from multiple regions without impacting, as in about your blast furnace, Tata Steel blast furnace?
Yeah, so I think that's an interesting question, Monica, because see, we across Tata Steel, India and Europe, we have approximately 7 hubs or 7 places where we make coke. And all these places have different blends due to, I think some of them were acquisitions which came into Tata Steel fold over a period of time. Europe, before it was a part of Tata Steel Group, used to operate differently. So the blending or the philosophy in terms of what you need, because the blast furnace sizes are also different, right? So what properties you need in coke is dependent on what kind of sizes of blast furnace you have. So a larger blast furnace might have requirement of a higher CSR coke, whereas a smaller blast furnace might not have so. So eventually all the coke ovens have a different sort of a blend. Our job as procurement is to synergize those different blends because we are a central team who are procuring for all the 7 plants across the globe. And so how do we synergize across this various things? So we try to reduce the or bring about commonality of coal to the extent possible. I know this is a bit counterintuitive to the diversification theory which we spoke earlier, but there has to be commonality also because when you're managing, it's not just about the coal and the entire coke ovens, but the entire paradigm of supply chain, right? So you have load ports, you have discharge ports. So the more number of coals you have, the more complexity it brings to the value chain. So it's important that you bring that commonality at the same time diversifies. As well as in, like I mentioned, the requirement of coke is different in different coke ovens, right? So uh, there are places where we need far leaner blend. So how do we secure more weak coals? So not really prime hard, but something like a semi-hard or semi-soft kind of coals. Whereas where we require higher CSR, it is important to have a more proportion of prime hard in the blend. So I think those are the idiosyncrasies we go through, but that is what a central team has to manage.
Sanjay ji, I want to take up this similar question to you as the blends are different, furnaces are different. How much flexibility do you realistically have in switching sourcing geographies without impacting your blast furnace efficiency?
Um, So, ma'am, it's like this. There is a very fair element of flexibility because while the nitty-gritty of the onboarding process of a new miner may vary from organization to organization, but essentially the underlying principles would be to evaluate the technical part of it, the chemical composition part of it, and other parameters like Mr. Rohitash was also speaking. So on similar lines, we in SAIL have a very well-defined process. And once when the material being offered by a new miner fits into that ecosystem, then the material is taken in for what we in our internal parlance call as industrial trials, and then subsequently further agreements are entered into. So there is a very fair element of flexibility. And that is the reason why we have been able to substantially increase the number of long-term agreements that we have over a period of time. And as Punitji very rightly mentioned, though you spoke about the Russia-Ukraine conflict, but he took us back at a time when COVID outbreak was there. And that arguably was the time when generally people in the steel fraternity started thinking about diversification in a very big way. So to answer that specifically, there is a very fair element of flexibility. And if I may add, talking about diversification very quickly, my assessment, as long as I've been a part of Coal and Steel Authority now, diversification is happening on 3 major points, right? Three platforms on which we see diversification happening. One, we see the existing miners offering more coals, which hitherto they were not offering. So they are mining more, they are exploring more areas, so they are offering more coals to steel players. We see more geographies who are interested in offering material to us. And from the existing geographies, more miners are interested in supplying material. India being the growth story, this is something which is now established beyond any doubt. All statistics, all narratives point to that direction. So I think we are seeing diversification taking shape quite successfully. The
इसमें
interest
एक
level
चीज और थी
sorry,
संजय जी, एक्चुअली में ना स्टैम्प चार्ज ने भी बहुत हेल्प किया
बहुत
डाइवर्सिफिकेशन।
हेल्प किया है, बहुत हेल्प किया है, बिल्कुल ठीक बोल रहे हैं आप। वी हैव एम्बार्क्ड ऑन दैट जर्नी इन सेल, बट यस आप लोग तो हैं वहां पे, वेरी करेक्ट। So, madam, I think what Puneet ji mentioned adds a good technical dimension to this diversification aspect. As he very rightly points out, the steel fraternity has benefited by this concept of stem charged batteries. So, we have more flexibility. Yeah.
Thank you, Sanjay ji. Keyur, I'm coming to you now with the rupee weakening and imports becoming more expensive. How effective is hedging in managing this risk, or are companies will largely exposed? So, if you could tell us about this aspect of
So
trade.
now, in last 1 month, you have seen dollar from 92 to 95.5. So hedging is very much recommended for this time, and aggressive hedging, because we have got the open exposures in dollars. So each and every day, what we generally do is we keep on the prices open up, we keep our position not open but close one. So it would be a necessity as of now, because you don't know, because now the messages and everything, it comes like it would be 95, it would cross very fast, it would go to 97. But at the same time, we have got one more thing, the dependency which has been reduced from the import of scrap, or maybe the import of iron ore as of now. So the domestic has been helping us more, as we have to pay in INR, and we have to take the position in INR rupees rather than dollars. So that has been a good thing for us.
So now, since you are not able to get scrap from Gulf, are you also exploring some alternate sources for scrap?
So basically, from Gulf regions, the scrap was it was same, like very short transit time. It's about 10 to 15 days. You get the material in your factories, and now the turn time is about 75 to 90 days. Saying up the material, the contract time is 30 days or 45 days, and again shipment period. Sometimes the containers get stuck up at the shipment ports. So the whole cycle goes about 90 days.
So now you're getting from where? As in, you must be getting scrap from somewhere, no?
Basically now, yeah, you can get it from United Kingdom, you can get it from USA, coming up from African regions, South Africa, you can get it. West Africa, you get the material.
So, if you could highlight on the freight and container cost, especially coming from US, again, it is going up. And how much of your sourcing decisions today is driven by the logistic economics rather than just raw material fundamentals? If you could just highlight on the.
So basically, coming up from the freight from USA, previously it was about $800 a container. Now that has came up to $1,400, $1,500, depending on port to port basis, whether it's East Coast or West Coast, the prices differ. Again, African regions, the containers are over there. So from Africa, you get the freight because the containers have to come up to India. So they give freight benefits to the suppliers over there. But in that case, also right now, if you say the containers cost have increased by about $10 ton, that's the exact amount as of now.
Okay. So, forwarding this discussion, I want to move to Rohit. Rohit, we have seen a lot of price fluctuation with the met coal. What could be the main reason behind it?
No, actually, if you look at it, the price fluctuation which happened after COVID was, I think, more accentuated than it has been in the last couple of years. So that time, I think prices shot up very significantly, and it used to happen in very short span of time. But fundamentally, if you see, Monica, I think if we were just to look at the met coal market, so 90 to 95% of the uh, I think supply and demand happens between miners and large integrated steel mills. However, if you look at the pricing, how it is set, it is based on the liquidity in the spot market, right? So, what kind of trades happen between miners and traders when something is offered in the spot market? And there probably ISPs or integrated steel plants don't play a large part. And herein comes the complexity, because a large part of those spot purchases or spot deals are not driven by the fundamentals of demand supply, but can be driven a lot by the hedging positions of various market participants. So, and this met coal market, as you would understand, is very illiquid, right? So there's not a lot of paper trading. I mean, the volumes of paper trading is low, and the physical spot market trading is also low. So from that perspective, one deal which can be backed by something in the paper markets and really influence the price like anything, which might not be supported by fundamentals. So I think that is a little bit of, I won't say change that has been there throughout, but that is a little bit of idiosyncrasies which is there in typical to met coal, which is unlike other commodities like if you look at LME kind of commodities, it is a bit different in coking coal.
So you're saying that the paper trade of met coal influences the prices of physical trade as well.
Of course, it does, because you see, you have the SAIL, JSW, Tata Steel. So we are largely buying in term contracts, right? So we have term contracts with miners, and a large portion of the trade is happening through that. Very little. So we will have something in spot, but that will be very little portion, maybe 5 to 10%. But the index, which is set by the price reporting agencies, is basically created out of the spot deals which happens in the market and fixed price spot deals. So and most of these deals will be between miner and a trader. Large trader trading community in met coal is there. So, and that is what is determining the index. So 90% or 95% of the buy is determined by the 5% of the trade which is happening in the spot market. And that trade, Monica, can be influenced by paper market positions of traders. That is quite understandable, right?
So does this change the way you approach sourcing for Tata Steel?
So I think there are two things which can happen. I think uh, not just Tata Steel, but the steel fraternity as such, or the Indian steel fraternity, can actually try to increase the spot position so that we are participating more in the spot market, giving more liquidity to the market, which sort of helps in determining the price points, right? But at the same time, I think earlier in the discussion, we spoke about this geopolitical risk, weather risk, and we are a steel company. After all, we are a steel company, and met coal is one part of it. There is iron ore, limestone, and the entire value chain of marketing and sales of long products and flat products. So, how much of risk would you want to take in a met coal kind of a commodity? So, whether securitization is important or driving the efficiency of that buy is important. So, that is always a trade-off. And obviously, sometimes we will lean towards being more risk averse when it comes to raw materials, because there's a lot of external factors which comes into play. So, but as Tata Steel, I can tell you that I think we have realized that this as a problem, and gradually what we have tried is to increase our spot purchase over the years. And we do have a strategy of keeping the spot purchase continuously whenever we find that probably the market is not reacting the way it should.
Thank you, Rohit. That definitely brings a different perspective to, how do we see coal. And coming to you, Sanjay ji, I want to ask you that going forward, what will be the biggest focus area for sale raw material strategy? Is it a greater diversification or long-term contracts or exploring alternative materials?
So, ma'am, in the context of sale, I'll talk about met coals and diversification. Yes, I think all of us have spoken about it, and we have absolutely, I don't think anyone participating here has absolutely any doubt that diversification has been and will continue to be the cornerstone of our procurement strategy. So that will be the case. Of course, it will have to operate within the technical boundaries of our operations, because all said and done, we will diversify only when the material meets with our operational requirements. And the steel which gets produced has to be finally marketed in the market also. I mean, customers have become very demanding, so naturally the final output also has to be borne in mind when hot metal gets produced, that it meets all the necessary requirements of steel melting shops and subsequently the rolling mills. That is one part of it. Talking about the roadmap ahead, we are basically engaged in a three-pronged strategy, diversification naturally being one. Second is we are trying to improve ourselves on the technology front. As Puneetji rightly pointed out, that usage of a wide variety of coals has been very successfully aided by the use of stem charge battery technology. So these technological interventions, stem charge batteries, replacement of met coals by materials like biochar. So all these experiments will have to go on, and how we increase the usage of PCI and all those things. So these things will go on so that the dependence on imported coking coal, imported met coals come down to whatever extent it can. Thirdly, talking about ramping up of the existing assets also. So like we in Steel Authority, we have certain coking coal mines. So we are in the process of scaling up output from that and scaling up output which meets the steel making requirements. So that will be another area of focus to make sure that these projects start delivering materials to us within the stipulated timelines, which to some extent will bring down our dependence in broad percentage terms on the imported coking coal front. And we are also actively exploring wherever there are areas of collaboration with other players in the coal fraternity. So for example, if there is a washery somewhere where there is a surplus capacity and it is underutilized for whatever reasons, and if we in SAIL see an opportunity there where we can collaborate and make use of that facility which is already existing to improve the availability of coking coal for our operation. So these are the three broad strategies which are being worked on.
KRG, coming to you, I would like to know at what capacity currently, the manufacturing facilities in Gujarat are working. What is the capacity they're working on right now?
Right now, they are working on a capacity of 60% tentatively, because previously we had issues of LPGs. Now things have been smoother, but also issues were there of fuel also. So the trucks, they were not able to come up more frequently for the material to take up from factories to the buyers. Also, the material we were unable to procure more from the ports because we have coal, iron ore, everything at the port. So there was some disruption a week, but now maybe by April 3rd or 4th, again the production capacity would increase, and also there would be things would be stabilized soon.
So it is getting better since last week, you're saying,
Yes.
and it will further get better if everything goes in line. So yesterday, when we were discussing, you mentioned me about Hong Kong conversion. Hong Kong?
Vessels, HK convention vessels.
Yeah. If you could explain a little bit of what kind of concept it is, and if we have this concept already in India or we yet to adopt this.
Already this HK convention you already have in India. It's just you need to have the vessels for the ship recycling. Each and everything you are removing from the vessel should be in a proper manner. Hazardous waste should be kept separate. Plastic scrap should be separate. Rubbers, everything in a very proper manner. This is how it has been done.
And your ship breaking plant is also there in Gujarat, isn't it?
Yes.
So you are able to meet up the local demand of the scrap availability since the shipments were the problem. So with your current plant of ship breaking, were you able to fulfill the demand of plants around you?
As of now, you can say like before 15 days, the criteria was different. Now coming up to the time as of now, we are unable to supply the material to the mills because there has been a constant demand of scrap. Let me say, I'm in based in Kutch. I've got the factory in Kutch, and taking the material from Alang, it's about 400 kilometers with a freight of 1200 rupees a ton. Also, I'm ready to get the scrap material from Alang, but I'm unable to procure the material on daily basis for my mill because there was also LPG shortages in Alang, so the ship cutting was hampered. It took about 5-7 days. The material was unavailable, so there was issues and problems regarding it.
So are you also aligning with the scrap yards, as in government also introduced a lot of policies supporting the scrap market, and there are many companies who are opening up scrap yard for the scrap processing. Do you have plans to do that, or you already doing it?
Already, we are also setting up a shredder over here in Kutch,
You
also
mentioned
with
it to me
RVSF.
last time that you had certain learnings post-COVID, and that is how the business is surviving. If you could share that learnings with all of us and for the companies, who are watching this webinar, because there's a lot of MSME steel manufacturers who are watching this webinar, maybe you will be able to give them a piece of advice.
So pre-COVID and post-COVID, what we have learned is we have put down an oxygen unit over here for our industry. So in COVID time, there was a shortage of oxygens. So now what we have done is we have put down an oxygen unit also over here in our factory. So all our units, they get the oxygen supply from here. So that's what one thing we have done. And now also during the time of LPG shortages, we have been very much advanced in technologies. So we have got the shredding machines. So we don't require for the billet cutting, also for scrap cuttings, making it sizable for the furnace. We have got small shredders. We have got small baling machines and everything. So that has been a thing that what we have worked in past 3 years, and we have built up a economy in such a way that it would not hamper our working of our industry, and we would be able to fit up in each and every zone wise, whatever the situation would be, that would not hamper our business.
So which means you made everything in-house.
Yes.
Puneetji, coming to you, going forward with your capacity expansion plans, what will be the key pillars of your raw material strategy? Greater captive integration or beneficiation or global sourcing?
So this will be blend of both, Monica ji. So in iron ore, we have gone above 30% in terms of a captive, and we will keep growing because auction regime may now there has been a lot of change in terms of our auction rule of 2015, even in MMDR Act. So we will be guided by that, and we will keep participating and securing more of our own iron ore blocks. Cooking coal also, partially we have gone ahead with equity participation in Australia, and also we have now there is a mine in Mozambique. And in domestic also, as I told you, we acquired in the auction process 2 of the mine, and also we are going to start the washery very soon. So this will help us to grow the captive in cooking coal also. So idea is to do the balancing and then accordingly keep growing, because the way we are expanding on the steel capacity, the need was felt, and then that's how we are started growing the captive portion of the total overall strategy.
So that is a good plan, but this also indicates, will you be continue to import iron ore?
Not necessarily.
Yeah.
अभी जैसे कि मैं क्वेश्चंस आंसर देख रहा था आपके इसके स्क्रीन में, तो
Yeah.
किसी ने ये भी पूछा है कि भाई लो ग्रेड आयरन ओर इंडिया में क्यों नहीं यूज हो सकता, तो और बेनिफिशिएट क्यों नहीं कर रहे हैं लोग। तो अगर आप पिछले 2-3 साल में देखेंगे तो लो ग्रेड आयरन ओर का एक्सपोर्ट कम हो गया है, तो दैट मीन्स दैट इज बीइंग यूटिलाइज्ड इन इंडिया and it is being beneficiated, and as much as it will be available, it will be utilized and beneficiated in India as per me, because a lot of capacities are hungry. Only thing is that because the beneficiation cost with respect to the wet beneficiation in India is slightly higher, so government is to intervene and make some policy changes which will make amenable for doing more beneficiation in India of the low grade iron ore. So
Right.
that's a part and parcel of the strategy, and India is geared up for more utilization of the low grade also.
Thank you, Puneet sir. And the last question I want to take from Rohit, and then we will close the webinar as the time is also approaching. Rohit, I want to understand what kind of changes you have seen in the trade flow of met coal shifting. Rohit.
Yeah. So I think, like I think we discussed in the earlier part of the webinar, India was heavily dependent on Australia for a long time. I think almost 80% of the share or coal used to come from Australia. In terms of met coal, I'm talking about. But gradually, we all have spoken about diversification, and a lot of trade flows had emanated from US, Mozambique, Canada. Indonesia has been there. Indonesia has been there throughout, but a lot of growth has also taken place in terms of share of business. A lot of it had to do with, I think, trial and usage of new coal. So I think with the different kinds of batteries, it gave us flexibility to try new coals across globally. So currently, you would see the Australian share, like I think Mr. Punit mentioned some time back, has come down to almost 50%. And obviously, going forward, it is 50, Australia is 50% of the seaborne supply also. So that ways it is sort of streamlined. But one has to see how much there is obviously this element of customs duty, which comes from US and Canada, right? And I think a lot of work is going on that front. So if something materializes out of that, these sources are going to become even more competitive with respect to Australia. So we'll see. We'll wait and see. The shift has already happened, but whether there is more room is something to be seen.
Thank you so much, Rohit. Thank you to all our esteemed panelists for sharing
Monica
such
ji, there
insight.
are few
Yeah.
questions on the screen. Should we answer
You
one or two of them
you
before
can,
you
as
close?
in, yeah,
Because
actually there
people
is
will
a
be
time.
expecting us to answer. Maybe half a minute
You
each.
can take up, sir. As in, I think the questions are visible to all our panelist
Yeah.
screens. So I'll just
Okay.
read out questions one by one. One question is from Mr. Shankar Raman. We will go very quick with the question and answer. So he wanted to ask, in your point of view, when will Indian steel companies start actively utilizing inferior iron ore and iron ore fines in significant tonnages?
तो यही मैंने आंसर किया था कि
Yes.
India is ready for the beneficiation of the low grade and export also has been going down. So people are either blending along with the high grade or they are beneficiating and making a use of it. Only we are waiting for the few more policy directions to make it more amenable and for the beneficial for the user industry to make it work.
Yeah, so धीरेन्द्र जी ने भी क्वेश्चन किया है लाइमस्टोन का, if anybody would like to answer, is steel grade limestone supply at risk for Indian steel companies due to the Middle East conflict, and what measures are in place to bridge any potential supply gap?
So
Because yeah, you can
unless
answer, please.
anybody else, I would just quickly respond. Maybe first three and then balance we can leave it to Rohit and Sanjay ji. तो लाइमस्टोन में जो मेरी स्टडी बोलती है कि करीब करीब 70% स्टील का रिक्वायरमेंट इंपोर्ट होता था और 30% डोमेस्टिक से सप्लाई होता था। और ये 70% में भी अभी जो मैं देख रहा हूँ जिस ढंग से, तो करीब out of that 45% are still being imported from port like Sohar, Salala and Fujairah। और जो 20-30% का जो डिफ्लेक्शन हुआ है तो वो अभी डोमेस्टिक में, जैसे आप सीमेंट ग्रेड का भी देखेंगे तो लोग यूज कर रहे हैं, चाइना से भी बहुत माल आ रहा है। तो दैट डिस्प्लेसमेंट हैज बीन रिप्लेस्ड एंड वी आर सीइंग द ग्रेजुअली द वेसल पाइपलाइन आल्सो इज इम्प्रूविंग। अभी भी हार्मुस के ऊपर उतना इम्प्रूवमेंट नहीं है। द पोर्ट्स विच आर बिलो हार्मुस इन ओमान एंड फुजेरा हैव बीन डूइंग बेटर। तो वो एड्रेस हुआ है, but in coming days it will improve further.
So I'll take the question of Ruby Bar to Sanjay ji, because she asked question to you also, Puneet ji. And the question is same, probably since you have answered, Sanjay ji can take this up. How are we planning to consume more domestic coal and reduce import dependency? Also, in the wake of the current increase in energy cost, how are you planning to strategize long-term stability and secure alternatively, sustainability and secure alternates.
So, ma'am, a very relevant issue raised. Guess large part of it was covered by esteemed panelists during the course of the conversation over 1 hour. So it's like this that talking about more domestic met coal consumption, yes, actually the technology will play a role. Puneet ji spoke about it. I fully endorse that technological interventions, stem charge batteries is the first such intervention which comes to our mind. So that will make sure that we use more of coals which are not comparable, which cannot be used today, but they will be used once when these technologies make a more stronger footprint in the overall steel fraternity ecosystem. Scaling up of output from the captive coking coal mines is another area where the steel fraternity is working. And as also got covered by Puneet ji, that fraternity is also looking at expanding assets, acquiring assets overseas, so that the assets are more like an extended arm of the domestic assets which the fraternity owns. So that will be one thing. And talking about securitization, I think we have spoken about diversification. Dependence on coking coal is going to stay. All of us are aware about the targets of the national steel policy, the type of output which we are looking at by 31, 32, and then subsequently 2047 when we will be Viksit Bharat. So we are looking at 500 million tons of capacity by then. So our dependence on imported met coal will be there. How much we can bring it down, how much we can diversify is something which has got discussed in the last 1 hour and will continue to get discussed. But I think all of us are aligned on that. And concrete steps are underway to make sure that this happens.
So I'm taking the last question and then we are closing the webinar. We are already 5 minutes up. So this question is from Saurabh Rai from SL Mining. He's saying that depleting Fe grade is concern for Indian steel industry, but at the same time, low grade below Fe 55% is also making a good space in China market. He means that the export potential is there for the low grades. Need to understand demand in upcoming days from overseas market. So it is your choice whether you want to answer it or you want to pass. Please let me know, and then we will close the webinar. Yeah.
So if it
Puneet
goes
ji.
for, I think Puneet ji or Rohitash can answer that. I'll pass it to
Export to below 55 export is happening, and even also trade is happening in India. So market is there in India and export both. China has been buying most of the Indian iron ore, which is being exported. So as per me, there is a market in India also for the grade below 55.
And with this, I like to also inform our audience that we would like to take more and more questions, but I request that if all the questions are posted within the time frame, so that we'll be able to take up timely and with clearly emerges from today's discussion is that raw material sourcing is no longer a back-end function. It has to become a core strategic pillar for the steel industry, and we are operating in an environment where volatility is not temporary, it is structural. Whether it is coking coal, iron ore, or scrap or fluxes, the challenges are no longer limited to price but extend to availability, quality, logistics, and geopolitical risk. At the same time, India's steel ambition to 2030 and beyond remains strong and non-negotiable. This makes it imperative for the industry to move from reactive procurement approach to a far more realistic, resilient, diversified, and forward-looking sourcing strategies. Audience, I like to inform you that our next webinar will be on the myths of green steel, reality checks on energy efficiency and decarbonization. Nowadays, there are a lot of discussion about green steel, but we also need to break the myth about the green steel. So we will see you soon next week, Tuesday on 7th, 3 to 4 p.m. Till then, have a great evening, have a cup of coffee or tea, and enjoy your evening. Thank you so much. Thank you to all panelists.
Thanks.
Thank you. Thank you.
And from my side to Mr. Rohitash, I heard him from the first time, met him, of course, through the web for the first time, and to Mr. Shah also. Listened with a lot of attention to their observations, which naturally, as a person from the industry, are going to help me quite a bit. Puneet ji and Amita, of course, they are there. Their presence is very reassuring. So thank you, ma'am. Thank you for this opportunity.
Also, the recording of this webinar will be available on our YouTube channel. So do not miss to subscribe. Just go to your YouTube app, type Metalogic PMS, and you will find the channel and check the recording. Thank you so much.
Thanks, ma'am.
Thank you.
Thank you.